Hello, I'm Dan Stausa, lead wealth advisor here at Flagstone Financial Management, and we're going to talk a little bit today about a type of retirement account for the self-employed that not a ton of people are familiar with, but that can be pretty powerful. It's called the Solo 401k. It goes by a lot of different names. You might have heard it referred to as single K, single 401k, one participant 401k. They all mean the same thing. We refer to it as the Solo 401k. So, who can open a solo 401k? If your business is only employees are owners or their spouses, then you can have a solo 401k. Um, so, we work mostly for the people who have solo 1ks through us. It's mostly that person is the only person in the business, or maybe they have one business partner who also is an owner. That's a really common scenario. Another really common scenario is the owner who is the sole owner of the business, but they also employ their spouse because maybe their spouse contributes to the business in some way. They can pay them a wage, and then both those people can be participants in the solo 401k. So again, it's if your only employees are either owners or the spouses. So why do people open solo 401ks? One of the big reasons people like solo 401ks is because they're high contribution limits. So we're going to talk a little bit about how much exactly can you put in a solo 401k. Well, when you're dealing with a solo 401k, you have this employer pool of money and you have this employee pool of money. So as the employee, you can put in for 2023 $22,500. And if you're 50 or older, you can put in another 7,500. So that's $30,000 combined as the employee. And then for 2024, the employee limit's going to be $23,000 plus 7,500 if you're 50 or older. So that's a decent limit right there. You have to have enough income or wages that you pay yourself to be able to do that much. But that's just the employee portion. And that's just the same as any 401k, like big employer sponsored 401k that has, a lot of participants in it. Then there's the employer portion. You're the employer when you're self-employed as well, right? But you also get to put in 25% of your net self-employment earnings as the employer. So you can pair these things together, and for 2023, those two things combined can be $66,000. So that can be pretty powerful. And if you're 50 or over, you can do the other $7,500 on top of that. So $73,500 total can go into a solo 401k if you're 50 or over. Again, you have to have enough business profits, and you have to be paying yourself enough. And depending on what kind of entity you have, those calculations can be a little different. But assuming you're able to max them out, that can be pretty powerful because you can make either pre-tax or Roth contributions. Well, what does that mean? So, well, if you put in $73,500 pre-tax, you're lowering your taxable income by $73,500. So, if you're paying 30% income tax combined between state and federal, that's more than $22,000 of tax savings. So, you can, if you're going to be in a higher tax bracket later in life and you aren't necessarily prioritizing current tax savings, but you want to maximize tax savings for the future, you can make Roth contributions. Those don't do anything for you currently with regards to your taxes, but the growth is all tax free, and the withdrawals are tax free in retirement. So you can get a decent chunk of money into Roth assets for tax free growth. And that can be pretty powerful as well, not just for future tax planning, but also just for retirement planning purposes. So, how does the 401k, the solo 401k, compare to other types of retirement accounts for the self employed? Well, it is usually going to have the highest contribution limits of the basic retirement plans like traditional IRAs, Roth IRAs, simple IRAs, SEP IRAs. Solo 401k is usually going to have higher contribution limits than those, assuming that there's enough profits and that you pay yourself enough. So that's by far the largest reason people typically like solo 401ks. There is a decent option to do Roth contributions. Um, like you can put in a bunch of money towards Roth accounts compared to the other types of accounts like Roth IRAs. They've got higher income limits. Roth 401k, not the case. Um, compared to a SEP IRA, a lot of people compare them to SEP IRAs. And the thing to remember about a solo 401k is that there's that employee contribution limit and that employer contribution limit. The SEP IRA is really identical to that employer portion of the solo 401k. The calculation is the same on how much the employer can contribute. So the solo 401k is really like a SEP IRA plus this employee contribution part of it. Another reason why the solo 401k can be a pretty powerful tool is something called after-tax non-Roth contributions. I won't get into a ton of detail on that, but you can put in above those limits that I've been talking about of like the 22,500 employee limit for 2023, which is going to be 23,000 in 2024. Above and beyond that, you can put in what's called after-tax non-Roth contributions. Those don't lower your current taxable income, and the growth is just tax deferred, but you can then take those dollars and do what's called a conversion into a Roth bucket and get even more dollars in Roth. The combined amounts that you can put in all these different types of contributions are still 66,000 for 2023, unless you're 50 or older, and it's going to be 69,000 for 2024. But if you're not paying yourself enough, or if your business didn't have enough profits and you're not quite able to get up to that limit, otherwise, you can put in these after-tax non-Roth contributions to kind of get closer to those limits. That enables what's called the mega backdoor Roth. And I'm not going to get into that. It's kind of a complex thing, but just know that if you hear about a mega backdoor Roth, or if you are reading about those types of complicated strategies, a solo 401k is one way you can do that. You have to have, one final thing I'd mention about contribution limits. Remember I said that the spouses can also be employees and they can participate in the solo 401k as well. All these contribution limits that we talked about are effectively doubled if you're paying your spouse enough. So, instead of 73,500 as the maximum for 2023, if you're over 50, it turns into almost 150,000. And then what if you save 30% in tax on that? Talking pretty big numbers there. Or a lot of dollars putting away, a lot of dollars into Roth for tax-free growth. So can be pretty powerful. I will mention that how do you do all this stuff? Well, you have to get a hold of a financial institution that supports solo 401ks, and you have to have a plan document provider that can draft a plan document that kind of governs or rules the 401k, and it says kind of what you can and can't do. When it's a solo 401k, usually those are going to be pretty generous with what they allow you to do, because they're really just only thinking about how much you're going to want to be able to put in it. So you're going to make the rules pretty generous. We work with a custodian and with a plan provider who does makes it pretty easy. It's pretty low cost and not very complex, all things considered. That's one of the reasons people shy away from doing 401ks, is because it's kind of a step in the way of complexity and administrative work. But when you're talking about a solo 401k, it really doesn't have to be that. So if you want to learn more about this, please let us know. It can be a great tax planning opportunity, great retirement plan opportunity, and we'd be happy to talk you through it. If you want to kind of see this stuff in a written format, check out our blog. We will try to post a link to the blog wherever you're seeing this video. And yeah, we'd be happy to talk you through the ins and outs and whether it makes sense for you. But you're also definitely going to want to talk to your tax professional, because the calculations on how much you can put in are definitely complex enough to where you're going to want to talk to a professional. I'll kind of wrap up by giving you a disclosure here. The information I'm talking about today is certainly subject to change, so think about those contribution limits in particular, and then how things are taxed can change. So I'm not giving you tax or legal advice. You need to talk to a qualified professional before taking any action on anything I've talked to you about. Everything I talked about was prepared by Flagstone Financial Management. We obtain the information from sources that we believe to be reliable, but we can't guarantee the accuracy, reliability, or completeness of what I'm telling you today. And we can't be held responsible for or liable for any direct, indirect, or consequential losses from its use. But again, if you want to talk through any of this, let us know and talk to your tax professional, and we'd be happy to give you a little more information. Thanks.